Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest, and that's going to be Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. Good to be here.
All right. So, yeah, when we put this on your radar, as far as your sentiment data goes, I was looking at the chart yesterday, and I was just like, oh, my goodness, I couldn't believe that UPS was at, lows that we haven't seen in over 3 years at this point. What kind of data do you have? Is it supportive of this massive parabolic sell-off that we've seen in this name?
Yeah, I tell you what, I mean, I'll kind of jump to it a little bit. We don't have a hugely bullish position or reading on the earnings. We're kind of neutral. But I will tell you that just in the last month or two, we did issue an alert to our hedge fund clients that we believe this is oversold. We like where they're at. We like moving forward on this company long term. So I do think that they are oversold, and the data backs us up on this. Obviously, everything we do is based on data. When you look at where they're at right now, a lot of the problems that they've had have been related to labor cost and contract negotiations. They lost, I think, 1.2 million daily parcels due to all of that, and they're trying to get that back through rebates, and they're working on that. They do have. When you look at web visits, they're up about 2% on a year-over-year basis, which is obviously good. When you look at the share of web data, they're beating FedEx slightly. I think it's 55 to 45% on that. And again, they're up a little bit. This is sort of the low period of time, obviously, in the summer and fall, right before the holiday season. But if you're gonna, even if in the low season, you'd rather be up than down. So plus 2% is good. On the mention side, it's pretty flat. It's about negative 2%. We don't put as much stock in that as we do with the web data, but you can see here the divergence is unbelievable. I mean, the web data, the blue line, the mentions data, the blue line looks kind of like business as usual, right? But the stock is just like this company's going out of business is what the stock price looks like. It just seems really, really oversold. Happiness-wise, the two companies are very much in line. UPS with a slight edge, 56% versus FedEx is at 54%. So really everything that we have is just kind of showing that they had some trouble with labor, but now it seems to be business as usual. Right now, I think that the consumer's working against them a little bit. People are prioritizing travel and experiences over hard goods and electronics and things that you would get shipped to you from UPS. So that's kind of working against them. But the difference between UPS's performance and FedEx performance is very, very stark. I mean, we're talking about about 18% in the last 9 months on the stock for UPS selling off, and FedEx is up about 25% in that same time. So the data that we have does not support this very low price. We think it's oversold at this point. We know that costs are up, labor costs are going up 9 or 10% this year, but they've also increased rates to match, and the rate hikes are actually competitive or in line with what FedEx is doing. So I don't think they're going to lose a lot of business to FedEx on that. And they talked about how they're focusing on automation and reducing part-time labor in their sorting facilities. So, as automation becomes more and more prevalent, they're going to save money there. So I think that, long story short, I think it is oversold, and this is a good opportunity to pick up some shares. Now, I don't think that they're going to blow out earnings. We don't have any data that says that anything like that's coming. We're kind of neutral on the earnings report itself. I think it could be an earnings report where they say, hey, things are kind of going okay, and investors realize, wow, look at the price. Hold on, dividends now at 4%. Maybe this is a little bit oversold. So I could see a bounce on that, but I don't see them coming out and shocking everyone with huge numbers. So I'm not taking a position going into earnings, but if they're flat or down on earnings, I think it's a definite good opportunity to pick up shares for a longer term position.
Landon, management lowered their full year guidance for earnings and revenue, and they lowered it not a little. They lowered it substantial. And their better, not bigger theme that they have going is working. Their average price per package improved, but they couldn't overcome the big drop in volumes that they saw, domestic and international. But believe me, I'm starting out negative. I'm going to turn this to the upside here in a minute. Landon, this company doing the things they're doing, getting ready for this cyclical upturn, are probably going to come out of this pretty strong when this all turns. And this business is cyclical. It will turn, and they'll be well positioned when that happened. August of 2020 was the last time the stock was up here. So it basically took the entire pandemic and wiped it out in one big down move, Landon.
Yeah, it's a lot. I mean, to think that this company is the same value that it was 3 years ago, it's tough. I mean, I agree. I understand that they lowered guidance, and there is a low bar going into the holiday season. Just like I said, it's a weak consumer right now, at least when it comes to items that you would have shipped. And I think that that's kind of priced in. I think a lot of things are really, really priced in and potentially overly priced in, and that's why the stock is so low. I'll be surprised if there's news that comes out on this earnings report that sends the shares tumbling even lower, because it seems like everything that could be bad has been priced in, it's been announced, it's been figured into the stock price. And now, in my opinion, it's going to be the bleeding is stopping, or this isn't so bad type of report. Whether or not that sends the stock, soaring off on earnings, probably not. Probably a little bit flat, maybe a slight bump up. But anything that's, if the report comes in as expected and for some reason the shares would sell off, then I would definitely be picking up shares. I don't think they will. I think that we're looking at a pretty low point for this stock right now.
I think, it was shocking to me when I actually looked at this chart, so it's not surprising to see that. But we'll have a chart on this in a little bit later. But Landon, thanks for the data. Appreciate it.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data for us here on UPS. I mean, Kev, we talk about UPS probably every